The Treasury Bills market has been quiet as investors turn their attention to the Bond and OMO auctions this week. I mean, what should we expect ahead of next week's 252 billion Naira T-bills auction? Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA, joins me for a market update. Chuka, a very quiet week at the bond markets, but at the Treasury Bills market this week. Now, are we going to see any respite with the 252 billion Naira T-bills auction scheduled for next week?
Yeah, thank you, Aki. So like you said, we expect to have the auction next week. 252 billion will be, will be on. Actually, it's 220 will be on offer. What is maturing is about 258 billion. Just the same way, the same pattern. The DMO is not. It's not. Offering what is maturing, so it's an indication that the appetite to borrow quite heavily has decreased over the past few auctions. So we expect to see those who lost at this auction. We expect to see some of those demands into next week auction, and then of course we also expect to see oversubscription, just like the one of this week.
All right, now I will take you on the appetite, the borrowing appetite of the government later on now. But let's look at how so far the market has fared. Now we've seen interest basically on short-dated papers. Now, what do you think is driving that? I mean, and then also looking at the fact that the bond and the OMO auctions of this week also showed an impressive investors' appetite for Nigerian securities.
Yeah, so let me just run through what happened this week. So I'll obviously have to start with liquidity. System liquidity opened on the positive of about 1.5 trillion on the back of the FAC, that was paid last week. And so going into Monday, which of course, like you mentioned, we had the bond auction. Two maturities were on offer, the 2029 and then the 2032. We saw about 80 billion was offered, well over 300 billion was the subscription, and then about 186 billion was sold, indicating that there were more, investors' appetite, than expected. So we saw, decrease or decline in yield, about 205 basis point decline in yield. So we saw the 2029, for example, close at 15.69 from 17.75. That's about 206 basis points. The 32, we saw it, close at about 15.90 from 17.95. So this obviously has affected the trading on the secondary market for, of course, those who lost at the primary market, entered the secondary market. And so in keeping with with their tradition of, trying to mop up excess liquidity in the system, CBN offered OMO, about 600 billion was offered, and then about 1.6 trillion was subscription, and of course they sold about 1.5 trillion. So that indicates that obviously investors' appetite, we are really, like you mentioned, we are really much on the fixed income market. But again, there were two drivers of this. One is the excess liquidity in the system, and secondly, investors' appetite. We've seen yield decline over the past three months, decline from about almost about 400 to 450 basis points. So that obviously has pushed investors' appetite, and we're going to keep seeing yields decline further. However, on the OMO side, we saw the OMO rates, especially the longer tenor, moved from 21 levels to about 23 levels, all in about 26, 27 levels. Is expected in the sense that presently CBN uses OMO to encourage FPI to come in to invest. And then, of course, it only makes sense with our current inflation figure around the 22 levels. It only makes sense that the OMO rate is, above the inflation figure, just to to entice the investors.
All right, now, I would also ask you basically on the government's borrowing strategy right now. Do you think that what is currently at play aligns with the government's borrowing strategy, particularly for Q3, where the plans to borrow is not as heavy as it used to be, sometime last year?
Well, you see, if you watch the pattern over the past 3 years, or let's say 5 years, if you notice that, government borrowing pattern is usually heavy, the first 2 quarters, basically you see that that's when DMO, based on the auction calendar, you see that they tend to borrow heavily, from the market. And so going into the third quarter and the last quarter of the year, is seen as when activities of government is winding down, and then of course the government parastatals and agencies are taking stock of what have happened in the past year. And so I mean during the course of the first 2 quarters. And so it's not a surprise that the government appetite has reduced. And then also there are also other things that also affect that. One, again, is also, the need for DMO, to continue to, get cheaper funds. If you watch the fixed income market, you notice that the yields, like I said earlier, has dropped about 400 to 450 basis points. And that is because the cost of borrowing on this part of government is high. And so one of the mandates of the DMO, Debt Management Office, is to ensure that government borrow, as low or as cheap as possible. And so they've continuously tried to reduce, the amount on offer, and secondly, reduce the yield. And that is why you see that on the NTBs side, the yields are around the 15, 14 levels. But on the OMO side, which is obviously OMO is offered by central bank, like I said earlier, is higher, just to attract the FPI. So I think the borrowing pattern of government is still in line with their projection. I know that government also have other sources. Don't forget that borrowing obviously is to fund infrastructural development. And so that's why you see that most times, there are other form of borrowing a form that government use. For example, there are special, borrowing from the Sukuk bond for construction of roads, special projects, and so those are other form of borrowing that government has in mind, not necessarily on the fixed income space. But I think that going into the end of the year, we will see this reduction in offer, especially on the T-bill side, on the bond side, and then government will continue as the year winds down. Government will continue to take stock and then reduce amount they're looking to borrow.
So we should expect similar sentiments in next week's T-bills auction. Anyway, we'll keep a tabs on activities so far. That was Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA.